Market news now. Asian share markets fought to regain their footing on Tuesday as tremors from the collapse of the Turkish lira ebbed. But sentiment took a fresh knock when Chinese economic data proved softer than expected. Retail sales, industrial output and urban investment all grew by less than forecast in July. Shanghai's composite index tipped over 0.2% to end at 2,780 points. The Hang Seng index also took a hit, falling 0.8% to end the day at 27,701 points. Japan's Nikkei was the shining star in Asian trade, gaining 2.3%. Closing at 22,356 points. Over in the United States, stocks dropped on Monday as global jitters due to Turkey's plummeting currency spread to Wall Street. All three major U.S. indexes closed lower, with the S&P 500 and the Dow falling for the fourth consecutive day in a row. The Dow Jones Industrial fell 0.5%. The S&P 500 lost it by a similar margin, while the Nasdaq Composite Index dropped 25 basis points. Well, for more on what's been happening on the local and global markets, we cross now to Arabella Gumede, who's standing by for us.
Yeah, good afternoon, Nompumelelo. Well, it's a market in the red this afternoon. That follows yesterday's green trading and, of course, negative trading out of Asia and the United States as well. It was a fourth day of losses this morning as well, or rather last night out of the United States, particularly for the Dow Jones and the Nasdaq. Quite an interesting front there with regards to how technology stocks are faring, while the finance counters seem to be doing fairly okay. But with that in mind, let's take a look at how the European and local markets are faring. Well, as you can see there, the market picture with regards to the rand headed back towards 14 rand by the seams of things. It was even up at 14 rand and 4 cents at some stage as well. Perhaps we get below that mark will be quite interesting. Chris Gilmore, independent analyst, joining me as we unpack the markets this time around. Chris, thank you so much for the time. A better rand picture this time around, but we say better in the context of it hitting 15 rand and 41 cents, don't we?
No, yes, indeed. And look, as we've been saying for a while now, look, this is not confined to South Africa by any stretch of the imagination. Sure. It's emerging market contagion, and specifically Turkey. You know, like the rand, the lira is a very well traded currency, and you know, yesterday or the past week it was the lira, and yesterday it was the rand. Yeah. So. Today, you know, I think perhaps a bit more common sense is prevailing,
sure.
And you've got to try and understand the psychology of a foreign exchange trader. You know, these are vultures. These are people who have got no loyalty to anyone or anything, and fair enough. You know, you don't expect that, but you know, they prey on anything that looks like vulnerability, and you know, I guess they reckon that the worst was over for the rand. So,
but is the worst over with the entire saga? Because that's that's bound to reverberate and come back in some way or other, right? So do we then see a short-term strengthening in the rand, perhaps to get weaker a little bit later on?
Yeah, I think that's right. Look, I think the strengthening will be short-term. While the US economy remains in the ascendancy, I think you're going to have emerging markets on the back foot, and the rand will tend to move in tandem with that. And as long as we can avoid the temptation to get involved with idiosyncrasies, and we've been doing less and less of that since the change in political administration, then I think you know, we won't see the rand moving as far away from many of those emerging market currencies. Yesterday it did. You know, if you look at it relative to the others, it moved quite far away. But I think it's coming back, and there is more common sense and more certainty coming back into the market.
Coming back below 14 rand is perhaps the key mark on that front as well. But if we talk some equity news, or perhaps some more economic equity news, if we call it, 1,560 jobs being laid off by Goldfields. That follows, of course, Impala Platinum saying they're cutting down 13,000. 12,600, I think it is as well, from Lonman. It's just a bloodbath, and it continues to be a bloodbath, particularly since the turn of the decade, possibly.
It's particularly important looking at the Goldfield situation. You look at South Deep, that's a wonderful ore body. You know, I was chatting to a mining analyst just prior to when I coming here, and they've been trying for the best part of 10 years to get this thing right in terms of trackless mining, get fewer and fewer people down there, and they still haven't quite got it right. I heard Sven Lunsche, you know, the media guy, chatting earlier about it, and he was basically saying the same thing. You know, there comes a limit to what you can do in terms of natural downsizing. So this, you know, I think there was an indication a few days ago, last week, with Nick Holland, you know, he's saying we can't keep on going on forever. I think he was kind of softening the market up for the blow that came out today. It's a big number, as you say, and it's coming hard on the heels of many other mining companies. It's an awful industry to be in at this point in time, and I think it's just reflecting the very, very difficult conditions under which all the mining companies are having to operate.
There is still, however, gold, platinum, iron in the ground. Where then is the bottoming out of this bloodbath? Or is it a case of we're going to a stage of mechanization, so it's about reskilling or upskilling the workers in different areas?
Yeah, look, we have no choice in that particular arena. You can't send human beings down into areas 4.5 kilometers down below there. You know, you can't cool the rock sufficiently with any degree of certainty that they're going to be operating there under safe conditions on a sustained basis. So ultimately, if you look further out, you are going to have to go to mechanization. But that in itself has all sorts of ramifications from a social point of view. Miners may say, no, well, you know, we want to go down there, but you cannot subject people to that kind of thing. And you look at the kind of tragedies we've seen at Sibanye, for example, in recent weeks and months. It's really not on. So the longer-term future of mining, I mean, and you put your finger on it, South Africa still has the treasure trove, the biggest treasure trove of all minerals in any country in the world. But they're getting progressively difficult to actually pull out of the ground.
Yeah. Another company yesterday, SABC, coming out with their quarterly earnings as well, and a drop of 10% in that share price. The CEO saying that it was a little bit extensive with regards to that reaction. You agree?
Yeah, look, I've always regarded SABC as a sunset industry kind of company, and I tend to pay not too much attention to this one because it's always going to disappoint, particularly when you least expect it.
Yeah. Okay. What about ESO? I mean, we're seeing it right now here, and it sits at from time to time around 9 cents. It's now at around 3 cents a share. Is there a point for it still staying up? It's now asked for business rescue. It's really falling apart.
Yeah, and again, you know, you look at the construction industry generally. You know, I went to a breakfast presentation by WBHO, which I regard as being the best company within that sector. And even they were saying, you know, 9 months to a year, that's it. They've got a bit of a pipeline, but beyond that, there's really not much more business. So for the smaller some of the smaller players, there are one or two nimble players in there that are actually doing okay.
Yeah.
But for ESO, you know, I think they're letting you know that things are really, really tough. And the likelihood is it's not going to get materially better in the foreseeable future.
I know you also attended the Curo earnings a little bit earlier on as well, but unfortunately we have run out of time. But thank you so much for that, Chris. Chris Gilmore, independent analyst, as we just unpack the markets. They're looking negative today, certainly. And of course, we did see mining output do better than expected, 2.8% there, seeing a good number come out on that front. We will take a break for now, and when we come back, we will just unpack the VAT panel's report, which was released just last week. We speak to Tabi Lioka, who is the VAT panel contributor as well, just one of the few on that regard, and talk about how exactly it'll assist the poor. Back with you right after this.